Prefer if you stay, we go.
This presentation is about the disruptive forces that are going to shape the future of logistics industry. More academic in nature and speculative in nature. So some of them may become true, some of them may not. Let's wait and watch. I don't have a flamboyant presentation, but I'm sure I have a legible and relevant content. And please feel free to stop me if you have any questions in between, or if you contradict with some of the things I show or say here. Slides, please. So please bear with me until they bring up the slides. Thank you. So let's talk about the disruptive forces as we perceive today, and for the next 30 to 45 minutes. So these are the four major disruptive forces that are going to shape the future of logistics industry. Quickly, e-commerce logistics. Everybody knows about it, and the last mile delivery that comes with it. E-commerce capacities, the capacities that are currently and silently being built by the large e-commerce players. Third thing, new kids on the block with some cool gadgets and applications. Fourth thing, carriers envy. When I say carrier, I'm talking about the international ocean liners and container lines. So these are the four major disruptive forces that are going to shape the future of logistics industry. And let's go into one by one. So before I get down a little deep, let's look at the areas of improvements or inefficiencies in the logistics operations that paved way for these threats or these opportunities. Despite all the chest beating, logistics industry is still a sluggish one. With due respect to some of the greatest transformations that happened in the last decade, logistics industry is still a laggard one. Let me give few examples to back up my statement. First thing, globally, 30% of the logistics capacity are unutilized. That's because of lack of visibility into the capacity. An industry which is so asset heavy, so labor intensive, 30% is a huge number. So if you want me to quantify that, logistics is a $7 trillion industry, and the 3PL industry itself is $700 billion. So if you do the math, if you do the math for the cost of the unutilization, it will run into huge numbers. That's one inefficiency. Second thing, if you try to get a quote from a freight forwarder for international shipment, it usually takes about, on average, 100 hours. That's about 4 days. 4 days added to the lead time with no activity, no processing, no value addition. And that's a serious inefficiency. Third thing, the industry has been talking about pick to light, voice picking, interleaving, economy of movement within the warehouse, and automated guided vehicles for the last 3 to 4 decades. But the adoption hasn't been great. We've been talking about these since 1960, and still it hasn't been majorly adopted. And last one, if I talk about the third-party logistics providers, we have made peace with the fact that third-party logistics services is a commodity. It makes the lowest margin of all the subsegments of the industry. They make a margin of 8 to 10%. An industry which is so capital and labor intensive, which does so much to move shipments from one place to another place, there is so much scope for process efficiency, productivity, and value proposition, and I believe that they are not fully explored currently. So these are some of the inefficiencies that allowed these threats and these opportunities to come up. So with this introduction, let me get into each and every threat and give some background to you. The first thing, e-commerce logistics. The tremendous growth of e-commerce retail and the last mile delivery with the dynamic requirements has pushed the boundaries of logistics operations beyond the conventional hub and spoke model. So again, if you want me to quantify, the e-commerce retail is $370 billion industry. And the scariest part is, at the same time, the most exciting part is, it represents only 8% of the retail sales. And the expectation is that, the forecast is that it will become 15% in 2022, which means the e-commerce retail volume business will double in the next 4 years. So do we have the logistics capacity and capability to meet that juggernaut, to meet that snowball? That's still questionable. Second thing, e-commerce again, it's not only in terms of volume, in terms of the life cycle too, supply chain life cycle. 3 years ago, back in 2014, the number of days it took from order placement to delivery for an e-commerce order was 8 days. Now it's come down to less than 8 hours within just 4 years' time. So the cycle has compressed so much, and that's posing a huge challenge to the last mile delivery. Again, next thing, free shipping. It used to be a promotion till 6 months ago, but it's not anymore. Free shipping is a standard offering. All the e-commerce providers are currently giving. So as long as the customer is willing to make compromises on the delivery timelines, free shipping comes as a standard. So free shipping means the shipper or the retail company is bearing the cost of logistics, which means that he is allocating a portion of the margin he gets to cover the logistics cost, which means that he needs to keep the logistics cost as low as possible and under absolute control, because if he doesn't control it, he is going to lose his margin, which means that he is going to pass the pressure to the last mile delivery partner or the logistics company or the third party logistics company he works with, same pressure. So do we have the control, or do we have the mechanism to control the cost as much as the retail companies currently expect? I certainly doubt that. And again, another quantity. Currently, globally, on average, retailers spend about, let's say 18% of their, sales in logistics, and that's an atrocious number. That's an exorbitant number. I'm sure they would want to bring it down, which means that all the last mile delivery partners and logistics companies who work with e-commerce companies are going to face tremendous pressure to keep their logistics cost under control. Again, it's not about the volume, it's not about the expectations. So even the delivery options. So what started as an experiment has become a standard now. Let me give an example. Just to convince the customer, without the look and feel he gets from a brick and mortar shop, online retailers provided various delivery options. So it's not about being the fastest rat in the race. It's about being the most flexible. So the customer get delivery at the time frame they require, at the location they require, at the cost they require. So it's about being flexible. And this flexibility expectations are pushing the innovations to the best. Few examples I will quote. The partnerships of DHL and Amazon with Audi cars last year to deliver the shipments to the trunk of the Audi cars. The cars are tracked using GPS, and once located, using a one-time password, the trunk of the car is opened and the delivery is done into the trunk. Similarly, Amazon has done a pilot. The pilot is still going on. This is Amazon Key, which allows the Amazon delivery persons to drop the shipment or to deliver the shipment into your home, even if you're not there. Using a one-time password, they can slightly open the door, they can make the delivery. That's another. Similarly, robotic drone delivery has come up. Pickup locker, delivery to pickup lockers, delivery to toll booths on the route you take, or delivery to, let's say, some of the convenience stores, same day delivery. So many delivery expectations, delivery promises have been made, and that's complicating the lives of the logistics service providers. And I'm not even talking about the unpredictability or the customer unavailability in the process. Many of the times you go, the customer is not available, which means that you will have to replan it, or the traffic is bad, so you have to dynamically plan for it, or the product is damaged, so you have to get the returns back and then process it. So there are so many unpredictabilities that exist in the operations that complicates it further. So all these I'm talking about are for 8% of the online sales, which is, when I say 8% of the retail sales, and this is going to become 15% in the next 4 years. So let's think about the complexities and volumes we are going to deal with down the line in 4 years' time. So it will only get better, bigger, finer, and more complicated. So that's the first threat I wanted to speak about. Second threat, it's about the e-commerce capacities. Knowingly or unknowingly, all the e-commerce companies are building or have already built huge logistics capacities. Few examples, I'm taking the global context. Amazon has built about 90 million square feet warehouse capacity in US and Europe alone. They have built some in Hyderabad. They are building some more in other parts of India too. Similarly, they acquired Kiva Systems, which provides robotic solutions to their warehouses. And they are investing $13 billion in building each-speaking warehouse centers across the globe. And they have built a lot of sortation centers. Walmart has built 6 of them. So many capacities are being built. Even the small and mid-sized e-commerce players, they are looking at the density, delivery density in regions, and they are opening small distribution centers in those locations. So let's take a situation where these e-commerce capacities are given or leased to the small-time LSPs or online marketplaces or online aggregators. What will happen? That will eat into the margins of the logistics service providers. I mean, I don't think it's an impossible situation. I'm very sure they will see that they have a huge capacity, logistics capacity, and they can rent it out, they can lease it out, and they will make money out of it, which is what happened when Amazon built their own data center. Eventually, they became the largest cloud services provider. So that's second possibility. So I'm not ruling out currently. Third thing, new kids on the block. So many aggregators, so many online marketplaces, crowdsourcing platforms, let's say drone deliveries, and then Uberization concepts. So they are all coming up of late, so many of them, especially in the last mile segment. So somehow we are convinced, most of the logistics companies are convinced that these online solutions will be confined to small and medium shippers, and they will be confined to point-to-point deliveries, small parcels, or full FTO, full truckload. So that's how we are convincing ourselves that they will not become a serious threat to our industry. But that's not the case. If you look at the trend, the investment, the venture capital into these online solutions was $300 million in 2014, and last year it was $4 billion. So that's more than 10 times of it. So the world believes that these online marketplaces, these aggregators, or these drone solution providers will make their mark, and there's a huge investment which is going into it, which means that they will find a way to seriously compete with the logistics service providers. Starship Technologies, they have already started. They are doing the drone delivery in Europe, in urban areas. It's capable of carrying 40 pounds. Capable of delivering within 3-mile radius, and they are starting the pilot in Washington DC also. They've already started. So it's only a matter of time before they find a way, they figure out a way to compete with logistics service providers. So that's a third threat I wanted to speak about. The last one, and an interesting one, which is currently going on, is carriers envy. Okay, so this is the carriers envy. When I say carriers envy, I'm not sure if you are noticing the ocean carriers, the ocean liners, container lines, they are very disappointed about the money made by freight forwarders and agents. So 2 simple examples I will give. A freight forwarder was able to put a premium of 40% on top of the base rate given by the ocean carrier. So the freight forwarder doesn't have the pain of maintaining his own assets of hundreds of ships, while the carrier has it. But he charges 3%, and this guy charges 40% on top of the base rate. Similarly, the return on investment on the capital experienced or incurred by the ocean liners are 2 to 3%, while a freight forwarder does 20 to 30%. So that's the significant difference between these two parties. So this has woken up most of the ocean liners. Now they are thinking to expand their horizon from port to port to door. So a lot of partnerships are happening with insurance providers, customs agents, road carriers, rail carriers, and logistics service providers, so that even the ocean liners can provide door-to-door service instead of the conventional port-to-port service. I'll give you examples. Maersk is investing $400 million on its subsidiary Ramco, to club its LSP capabilities into the ocean services. Second thing, Alibaba has signed a partnership with Maersk as well as CMA to allow its customers to book capacity in Maersk and CMA directly through its portal without having to go through the freight forwarders. And I can quote a few more examples. So For example, most of the small and mid-sized carriers, they are currently, signing partnerships with insurance companies as well as agents and warehousing service providers so that they can provide, direct road-to-road service, door-to-door service, instead of relying on third parties. So these things are eventually going to eat into the LSP's margins and revenue. So these are the 4 threats I wanted to speak about in this session. So without being too elaborate, let me talk about, let me show you the impact assessment. Are these real threats? How serious are they? If I have to say now, it's not going to completely take away the freight forwarders or intermediaries or LSPs, but they are going to make a dent. So I will share this presentation. You can see how each of these threats will behave in the near future. So you can go through them. Currently, it's not big, but it's only a matter of time before they start eating into the margins of LSPs. So what do we have to do as an LSP, as a freight forwarder? What do we have to do to survive, to sustain in the market? It's very simple. 2 things. Keep the customers happy. Make their lives easy. Create the portal. Make the rate quote an easy, easy thing. For example, currently a freight forwarder takes about 3 to 4 days to provide a quote to the customer. Provide a portal so that they can, provide the parameters and then get the quote instantly. And second thing, provide end-to-end visibility to your customers so that they are happy about the service you provide. So improve the visibility, not only internal, even for the customers. Make life easy for the customers in terms of visibility as well as a rate check as well as placing a booking request. And then, remove the documentation, digitize and automate so that the pain of documentation goes away. Because of this, paper process, a few things are very scary, but, we are skipping that part. I will tell you something. On a daily basis, on average, $140 billion are tied up in disputes of payment between shippers and logistics companies. It's a huge amount, and it purely happens because of the paper process. You are supposed to charge me $1.79 and you charged me $1.8. So 0.1, there is 1 cent more. So until I get the correct invoice, I'm not going to pay you. So it takes about 5 days. So it lengthens the cash flow cycle. So take out the automation, digitize, take out the paper process, digitize and automate. It accelerates the cash flow, it compresses the cycle, and everybody is happy about it. Rest of them, dynamic planning, we've been talking, oh yes please.
I'm sorry to interrupt, and I think it's the wrong time for questions, but still, this
Please.
what you touched a nerve. This payment process. You said that if it is 1.8 and 1.79, that 0.01, how is digitization going to take away that the difference of your perception and mine?
Okay, great. So when a paper invoice, I'll give a simple example in layman terms. When a paper invoice is created, when the calculation goes wrong, because humans are prone to errors, and the papers are prone to getting destroyed. So the values change during the transaction. Let me take a simple digitization. Currently we are doing a use case in Ramco systems using blockchain to automate the invoice process. When a service is executed based on the contract term, that the transaction gets recorded and the invoice gets generated instantly. Or without even going to blockchain, in our application, in our transportation system, once you define the billing stage and billing frequency, at what point I'm eligible to raise the invoice, and whether it's weekly or monthly, once you define those, the system will automatically fetch the charge for basis, apply the rate, and create the invoice. So the scope for errors comes down. So when compared.
Yeah, thank you.
So when you digitize, when you automate, the scope for errors come down, because most of the invoices, I've seen logistics companies with 40, 50 people doing only invoice processing for suppliers and customers.
Yeah, you're right. That's the reason why I asked the question. Exactly. And it's good you said it comes down. It is not eliminated, I would say.
Oh, it comes down. Yes, I'm sure exceptions are there. So certainly, but it significantly come down. So 140 billion, if it becomes even 70 billion, that's a huge amount. 70 billion. That makes a huge difference to the GDP itself. So digitize, automate, and even in the 3PL services, which is considered a commodity service, you can make a lot of differences. Increase the value-added services you provide in the warehouses. Make it make the life easy for customers in terms of order placement, and enable EDI, enable ASN features, and try to bring cost and value advantages. So do not stagnate, do not saturate. Make a difference. So that's about it. If you have any questions, please let me know.